Hey guys, good morning everyone. Get ready to get started in just a little bit here. What's up guys, good morning, good morning. With the chat on this podcast this morning, opening rational inside the bands. Things look good. VIX is stable. VIX is below triple B, so looking pretty good. If that music's too loud, let me know guys. I'll turn down a little bit. Can you hear me? Check, check. Good morning. You can hear me? You good? I'm back from vacation, so I'm now getting everything set together. Somebody type yes if you can hear me. All right. What's up, Blue Edge? Good morning. Everybody hit the like button really quick. Let's go. Market's opening in 2 minutes. Hit that like button. Hit that like button. Subscribe. Get ready. Let's get ready to go. That mic is crisp. Oh, you like it? All right, baby. What's up, Sam? What I've noticed about Rocket Scooter, we got it. We have a Sam Smith, we have a Robert Smith. We literally got so many singers in this group. Got Robert Smith, the leader of The Cure. It's not really the Cure singer, but is that you, Robert? and a Sam Smith. So you know, we basically got a whole bunch of pop stars in here. All right, I'm on this Good Morning FinSwip podcast. So if my mic goes randomly mute or I'm talking to them while I'm talking to you guys, I'll leave the mic muted. I mean, not muted here. Okay, market's open. Let's get ready to go. Let me pull Rocket Scooter front and center. Oh. What's up, you guys? Let me get the platform up. Gonna log in. Wait. Okay, let's go. Okay, so we are opening markets rational. Things are nice and clean. I did all my checks. Nothing looks bad. Let's get SPY front and center on Rocket Scooter. Hang tight. I'm looking for some bull long ups, hopefully. Hit that like button, you guys. We have new strategies. We have new things released last week. We'll talk about those in a little bit. Let's get ready to go. I'm about to chat on this podcast quickly, so hang tight. I'm loving Target myself. Yeah, trying with some things I had from last week. I had you guys made a tweet a couple weeks ago. I pinned it up. It was about calling a bottom. I went long a whole bunch of things. Went long Apple, Nvidia, JP Morgan, Pepsi, and SPY. As of Friday, my JPs were up 700%. I made that post, and they're up even further probably now. So I'm just looking at those guys, and I do love Target as well. I think this is a great time. The market's very liquid. I don't think it's turning into a bull market, but I do think we're going to have a non-bearish close to the year, and things will start getting messier towards the second quarter of next year. So I'm taking some pretty heavy longs, and I chatted with Vegas over the weekend. I think she's kind of in a similar boat, so I'm glad to see her here this morning. Look at some of the same things I'm looking at. So love you guys. It's good to be here. Woo! Well, thank you. Yeah, I went out of town for 10 days to celebrate my birthday. I went up to Denver and had a very, very cool time. It was really nice. Thanks, brother. Everyone hit that like button. Let's go. BLU. Yes. Yes. Let's go. That's what we want to see. All right. Hold on. Where's my camera? Oh, there we are. Whew. Wait, can you see this in the back? Oh, my camera always turns the wrong way. There we go. That's better. All right, let's go. All right, I'm gonna keep looking at some of my trades that I have here. Hold on, let me look. Okay. All right, so we got a bunch of others here. All right, SPY BLU. Let's take a look at this and see what I want to do today. An eyeball out on. Okay, good. This is a long, probably 375. Watch a 1 point drop off of that for stop loss 374. Let's run the bullish setups for here. Click all four of those guys. Oh my God, why didn't y'all tell me my part was crooked? You're supposed to look out for me, guys. Yes, I just crawled out of bed. Yes, I've been on vacation for 10 days and I probably still look like it. Good morning, good morning. Hit that like button, you guys. Let's go. BLU, that's great. Let's put walls function up. SPY, monthly mode. Click it. Let's see if all, remember we talked about this last week. All the resistances cleared up on the monthly map. Remember, anything above 375, I said after expiration, there is no resistances on monthly. Look where my mouse is. Nothing. My thesis on Twitter, I nailed it. I fucking nailed it, guys. I'm going to tell you this right now. We talked about it for a month. You can go back to all the other streams. Doesn't mean I'm right. Doesn't mean market's bullish. Doesn't mean anything. But you guys know me. Very rarely will I do this. But when I do pin the tweets, I mean it. I'm doing this. Not dabbing, but like pointing at the fence and saying, I'm calling for a bottom for 2022 for the rest of the year. Rest of the year. And I backed it up with trades. And if you just want to see really quick, not kidding, this was Friday's close on JP. I've been in it for 2 weeks. I was in JP. Remember, the first streams I did, I entered the trades on the stream. Never exited them. Every day people are like, what are you doing? Why aren't you trading? Why aren't you day trading? I'm like, I'm in trades, guys. If I make new entries or anything on the stream, we'll talk about them. If I do any day trades, I show them on the stream. I made a couple last couple weeks, but mostly I was just entering and adding to those positions. I'll tell you exactly what I have right now. Let's look on my telephone. I got 44 in the money, JP Morgan, October 28th, 120 calls. I've got November 11th, 20 NVIDIA 130 calls. I've got October 28th, 30 Pepsi 180 calls. That's a breakout play to break out to all-time highs on Pepsi. That's what I think we're going. And then I have SPY 375 calls for October 24th, 39 of those in the money. Total about, I don't know, 40 grand total investment on those trades. I'm looking for it to turn to 160 grand by the end of this week. So I think I'm going to make 400% on this entire trade by getting in right at the beginning. When did I get in? Right? Let's talk about that. People are asking me to talk about my trade this week. By the way, hit that like button. Let's go. Oh, NVIDIA, big play NVIDIA. I've made no new entries. I'm still sitting here on my trade. All you see on my screen right now is my JP Morgans right here. These are where we are. Up 14 grand. Look at this. This is my real account number on the screen. Real account. How would you guys like to see me make $250,000 the next couple of weeks? Live on YouTube. I told you guys. I told y'all. For weeks, what did I say? Market's too liquid to crash. What did I say for weeks? When unemployment numbers tick up, Wall Street is less bearish because if people are filing unemployment, the fear of the Fed tapering off their aggressiveness pulls back. So let's look at everything we have. This is our pre-morning check. We do this every single morning. Okay, ready? Rational, rational, rational. VIX is not outside the risk interval band. Check, check, check. Let's go down here. Let's do UVXY. Let's look for the VIX. Man, don't I feel refreshed, man? I gotta tell you about my vacation. The best vacation of my life. It's phenomenal. I did everything. Like literally everything. It was great. Smash that like button, you guys. If you're first time here, make sure you subscribe to the channel. We're live every single morning. Front center, real trades. See them on the screen. VIX bear short down. That's amazing. Let's take a look at the brand new, beautiful liquidity map that our team put together. How adorable. How? Look at this. Wait, hold on. Oh, I always get confused. Which? Oh, here he is. Ow. How cute he is. I know. He's awesome. Anyways, we put together kind of a more graphically appealing liquidity map that wasn't the Microsoft Paint version we threw together last year. But the cartoon makes everything worth it. Okay, let me chime on this podcast real quick. Hold on. Yeah. BLU 375 looking good, guys. Time for bad lip reading at 3, 2, 1. Oh my god. I had the mic muted. I was tossing my thesis on the podcast today. All right. Let's keep an eye on Qs today. Where's my resilience? I knew something was missing. Make sure you guys always have resilience on your chart. Q resilience is negative, yeah. Yeah. QQQ today, hedge pressure 275, and Q actually our resilience indicator is showing a little bit of gap fills on the stock side as well. So Nasdaq's going to be the thing to keep an eye on. SPY's looking pretty stable, but keep an eye on that 275 level on Qs. I don't know. Are you looking at that one, Danny, as well? Are you trading Qs today? All right, let's run the scanner, you guys. Let's pull some BLUs. Boom, 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 and boom. All bull ups. Let's see what we have. Let's add to the scanner. Monthly and MHP break up. Let's look for things that have broken up to the upside. MO and HD. Home Depot. Oh yeah, I gotta remember to start reading chat. I've been streaming from a laptop in the family house we stayed at. They have 4 little ones. And it's cool. In Colorado, they have this thing called a basement. I don't know. Never heard. I know what that thing is. Texas, we don't have those. We typically have like attics where we can get away from the rising waters. But yeah, everyone in Colorado has this like kick-ass basement thing. Like it's weird. You like walk in the house and stairs go down, and then you exit the house and you're still on ground. And the physics confuse me. Like you walk in, you're ground level. Then you walk down a bunch of flights of stairs. You walk out, you're still on ground level. I don't know. It must be a mountain or something there. I don't know. Probably. Very weird. Mountains, like the ground does this. I think we have basements here. They'll be full of water down here in Houston, right? Anyways, just being silly. Yeah, they had this really kick-ass basement that was decked out. Like everyone's basement is like their movie rooms and stuff. Huge big screen TV, massive sitting area, and then off to the side, they had all this extra room. There was like a jungle gym. You know, like you would have like a jungle gym, your kids are like monkey bars and stuff. They literally had this in their basement for their kids. So there's like a huge giant playroom over in the corner with like monkey bars and slides inside the house. This deep ass basement. It's so cool. And then off to the side was like their offices, all these desks and everything, like desk right here. So Cole's, I don't remember how everyone's connected. Her brother's wife, an office here, huge table here with all these monitors and stuff set up. And I was streaming from my laptop, so open the door, you know, this little sliding door right by us, and you could just see this lake, this mountain is beautiful, the sun would rise. Waking up at 6 o'clock in the morning to trade. I don't know how you guys do it. Mountain time, right? So weird. Home Depot, let's look at this. But yeah, Home Depot and breakout side. Let's look at walls here. Trading, yeah, so I now understand what's awesome about Central Time. Being able to trade when the market opening at like 8:30 in the morning. I mean, that's great. Getting up at 6:30 Mountain Time, which is 8. Hang on. Yeah, 6:30 to start my day. So 7:30 is when the market opens. So 6:30 in California. I don't know how you guys do it. Home Depot on the rally. Let's go monthly mode. Monthly mode. Let's look at HD. This goes upper targets. Market's breaking. Let's go. These are my JPs up 15,000 on the dot. 215. Okay, let's look up here. 275. Nothing. Popping up on our breakout scanner today, we have Home Depot on a 277.5 break. There is seemingly no resistance I see right now up until like 285. That's looking good. We have a couple other MO, KR, PG, actually. PG and GM all popping up. So things are looking pretty solid today for a lot of stocks. And Nasdaq resilience just some positives. So we're getting stocks rushing through and breaking their gap downs and pushing up to fill the gaps to the upside. So things are looking pretty good for this first wave. Look at her go, baby. Let me, I forget the TD has like a really dog shit reporting feature. My JPs are up 760% today. Good old post on this one. You know, Rocket Scooter account here. Let's go. Okay. Any question about how the scanner works? Make sure you go right here. Dude, you know what I do? I bought some like lavalier mics. So I know you guys love seeing me stream like this where you can't see my face. I know it's been your favorite thing for the last couple of years, but Daddy went and invested in like clip-on mics. So they might have to like, just like be like this with no microphone anymore. I'm gonna get that set up today. Currently talking to Good Morning Fitswit Twitter Spaces. Yeah, I'm on the Twitter space, so I get on there and talk to them as well. I'll leave the mic unmuted so you guys can hear what I'm saying. It's probably smart. How can I more quickly see MHP and HP Rocket Scooter while having to mess with the chart? For like a watch list of stocks or just in general? So one of the things we'll be doing, and actually we're going to be opening this up this week. We've shifted around what we want to do. I know you guys want Doomsday, but let me tell you, Doomsday requires futures data. Okay. Futures data requires a futures data feed. Well, here's what we decided to do for you guys. Y'all ready for this? Futures data feed. We have connections out there with futures brokers. We're going to add Doomsday. We're going to add dynamic hedge pressure to Rocket Scooter. But what we're going to do first is we're going to add a DOM, get futures data, and you're going to be able to trade futures through Rocket Scooter by the end of the year. How does that sound? Your Trade-of-8, Ninja Trader accounts, a couple other brokers. We will open up futures trading and a DOM so that once we get that feed, then Doomsday pops right on after that. Risk interval pops on right after that. Then as soon as we get all that, we need futures data as well to calculate auto red lines and auto yellow lines. We sat there last week. Myself and the team spent 3 weeks meeting and going over our 3-year milestone. We took every single thing that we had on the plans for what we're going to do. We organized it, and there's no quicker path to getting you guys Doomsday and all the other things you want. We got to open up futures. We were never planning on doing it. Now we're looking into it now. We're doing all the feasibility, all the study. We just hired 2 new guys. They're going to help build it. Make sure you can bracket. Yeah, so the reason we white labeled TradingView is so we don't have to build any of it. Yes. We're gonna add it's gonna be just like TradingView. We're gonna click a button and turn it on. Just like that. So whatever API connections they have, we can make. Any custom API that we need to make, like TD Ameritrade, we're gonna build it from scratch. So you're gonna see that little by little, we're gonna alternate our projects. We're gonna open up maybe futures trading, then maybe open up options trading, then maybe open up stock trading, little by little by little. So your broker, what you do is you log into your broker connection through our platform. So you would like go here, log in, just like TradingView. Log in, there's a drop down, pick the account. Oh, TD Ameritrade, boom, click. Log in, and you connect directly to your broker. We're just a pass through. So like if you have SPY, you want to be able to quickly see HP and MP somewhere maybe in the chart configuration on the side. You know what? I like that idea. Can you do me a favor? I know you probably are busy right now, but you see where it says resilience right here? Can you go to liquidity? Can you get like Microsoft Paint out? Do me a favor. Go to liquidity map right here and like take this, drop in the paint, give yourself some space, and then type up a little prototype that literally just lists HP, MP, half gap, and Doomsday. As a matter of fact, we can list the Doomsday indicator without drawing it on the chart much, much, much easier. We can give you that percentage. So can somebody mock that up, give that to me, and I'll give that to our team, and I'll have that on the platform by Friday. If you do that, draw me a picture of it, and I'll make sure they squeeze that in. Because the Doomsday number, we can create that without drawing it on the chart. The percentage, like 0.5, 0.6, 0.7. To convert it to futures, we need the conversion, right? We need the futures data. But we can give you that percentage, and I'm sure my mods will love that because they won't have to do it manually anymore. We good with that? So what I want it to look like is under liquidity map. Actually, you know what? No. How about up here at the top? And here. So let's have it always on the top for SPY, QQQ, VIX. Should it be green if it's above, red if it's below? Or maybe an arrow. Ooh, I like that even better. Watch this. Draw it for me. And if you draw it for me, because I'm going to be lazy, I'll make sure I put it in the platform. Go like this. Watch. SPY. Hedge pressure. Like this, right? And then have it say, I don't know, I'm going to pick a number, 300. That's not it. And then have an arrow like this. If you're above. Do you guys like that? Tell me if you like it or hate it. You ever been on a live stream where you're actually building a trading platform live, and down if it's below? You like that? When I export the levels to TradeStation, I will not, unfortunately, not export our levels to an exterior platform because there is a legality with data feeds. Now, I'll give you an example. If I buy data and calculate hedge pressure and sell you hedge pressure, right? I actually have to pay for what's called derived data on your behalf. So an example is if I do a calculation and give it to you, they're going to make me pay per user to derive the data. Like if I take options data that comes through and I make an options ladder that you can trade with, right? And I show you the bid and ask, I have to pay for pass-through fees, which means I have to charge per user and I have to report that, call it entitlement, to the data feed, to the exchanges. So they're very particular because it's a huge money maker for them to sell data. So if I give you data, if I were to take all the options data and multiply it by 2 and give it to you, I'm technically not giving you their data, but I'm deriving something from the data. They still make you pay for that so that I can't secretly pass it through to you and you reverse engineer the data from it for free, right? They make sure that nobody can skirt the rules. And we're very, very particular about that. So we're in the category of called non-display, where we take options data. We pay for the data feeds that Bloomberg gets. We get the same professional data feeds, opera straight from the horse's mouth. We calculate hedge pressure with it and we give it to you. If I were to export it to another platform, you could give it to other people like your trade room. Does that make sense? So unfortunately, me giving you the data or me giving you hedge pressure like through a bot or through something, you could distribute that to 1,000 people and then they could come back and say, oh yeah, Matt, you got to pay for those 1,000 people too because you derived that data and redistribute it. So there's a big like hurdle with that. So like for instance, like if you go to TradingView, right, there's a marketplace for indicators, right? You can buy someone's indicator, put it on your chart, but you're using the data feed that you already pay for to do that calculation. So for instance, if somebody had a Pine script that calculates some kind of moving average, you pay TradingView for your data, and then you put that indicator, just code on top of your data you pay for, and then it calculates the indicator. So that's how you're able to share indicators with people, but you can't share results with people. Does that make sense? So unfortunately, there's never going to be a way for us to export hedge pressure in any fashion outside of our entitlement control. That makes sense? So if I were to put hedge pressure in a bot and broadcast it to your Discord, I'd have to have you accurately give me how many people are using your bot, and I have to report that to the exchange. As a trading platform, we're held to a different standard because we buy data and let you see stuff calculated from it. So, and as Travis has basically summarized the story, there's no point in doing it anyways because I'm going to make you pay for my shit instead of someone else's shit. You know what I'm saying? That's exactly what Travis is going with that, right? He's like, but yeah, but Matt also wants you to pay for Rocket Scooter selfishly so that we can also make money and feed our developers. These guys, our developers are awesome, by the way. These guys work round the clock. Like, Amjad literally, the day of his daughter's wedding in the morning, was texting me about Rocket Scooter. I was like, he had to get surgery for gallstones. He texting me from the hospital bed. At the Rocket Scooter party, we had a huge launch party. Everybody flew to Houston. We had like 75, 80 people at our launch party. Everyone flew in. Influencers from financial, Twitter, YouTubers, all my friends, everyone in the industry that I know, plus all my partners, all the employees, everyone flew in. And it's like Friday night, we're drinking, having a good time, eating, everyone's there. Amjad lives in India, so unfortunately he couldn't come. Or was it, actually it was a Saturday night, I think. And Saturday night, I'm sitting there outside talking to one of the partners, and our newest, our product steward, who we just hired. He's like a strategic product quality steward. So he's gonna make sure like Rocket Scooter meets industry standards, meets UX expectations. He's gonna do server optimization, security, things like that. So me, him, and one of the partners were having a very serious talk outside. I know Emilio is kind of funny. A random torch appeared. Yeah, exactly. I know Emilio was gonna chime in. We're sitting there having a very strategic meeting, and then this kid walks up, like smiling like this. Stands right next to me, and then everyone turns and looks at him like, I was like, oh no, that's Torch. He's cool. Torch is cool. He's cool. And then we looked at him. We're like, but yeah, but what you just heard, you're sworn to secrecy. You ain't telling anybody. You heard our strategic talk with the partners. Walked up like just busting in while the Mafia Dons are planning something. At a random torch appeared. So it was really funny. But no, we were actually just talking about yo, what's up, Venom? Strategy and how we were going to build stuff for the year and stuff. So just being silly when he walked up. I was like, oh yeah, you guys meet Torch. That's Emilio right here in chat. A random torch appeared. But we do think that going forward, opening up trading is the best option, because honestly, I like to do my trades through Rocket Scooter. Instead of putting Thinkorswim on the chart, I'd love to be able to do trading. Options trading is going to be a big thing to add, so we plan on adding it. So if you guys do me a favor, like the stream while you're chilling here. Oh, I'm forgetting to tweet this thing. Hold on. How much is my JP up right now? Keep forgetting to do it. I forgot to send the tweet out. I got to copy the link to the stream. I need to check where I am though. My position. Okay, and then we'll do some tap. Anyways, we're going to be doing a lot of neat stuff going forward. So if you guys don't know Torch, if you don't mind, brother, you can drop your link to you guys' Discord. These guys have. Here's the cool thing too, right? We're meeting a lot of really awesome people, a lot of really awesome trade rooms, a lot of trading communities. And our goal is to build a network of reputable, honest traders, educators, whatever, and vet them personally and, work with them. You guys feel free to drop your, why don't you see MHP? Because it's probably way down here. So going forward, I want you guys to know that we're going to have a bunch of people on our stream starting probably tomorrow or the next day. We're going to have guest speakers on our stream. We're going to have multi-camera feeds, things like that. I'm going to be building it this week, so maybe not absolutely get it in by tomorrow. But we're going to be working on that this week. So just staring at SPY right now, keep an eye on resilience. If that's above 0, half gap is going to be support. So I'm looking pretty good. Okay. Anyways, the reason I brought up that story where the random torch appeared, because we were sitting there. That's why I remember I was talking about that. We were actually sitting there. It was like a Friday or Saturday. No, Saturday night, one of the two. No, it was Friday. Saturday we went and played darts, and Sunday we were going to go to the pool. So we're out there talking, and my phone is buzzing. And it's, again, Friday night, and I look at my phone, and Amjad, our head of development in India, and Austin, our head of projects, basically running all our projects as project manager and leading the projects group, are having a chat with each other about a Rocket Scooter release in the middle of a party. Austin was in the other room at the charcuterie board where the tequila was. And I'm like, and then I look at one of the partners, and he's like, I was like, look, we have an awesome team. And they're like, they're working in the middle of a party at midnight. These guys put in so much work for y'all. It's unbelievable. They treat Rocket Scooter like it's their own baby. Our team has expanded massively. People are passionate about this project. We're going to build the trading platform we've always wanted, that you've always wanted. We're going to put the tools inside of here that nobody has. We're doing positional risk. We're going to completely throw the industry upside down because we're no longer relying on technical analysis for risk management. Positional risk is the way to go. Make sure you click like on the stream while you're here, and feel free to let me know. But yeah, it was funny when Emilio walked up. Everyone turned like, oh, he overheard us talking about world domination. And one of the partners was currently in the process of ordering a hit to eliminate him. And I was like, no, he's cool, he's cool. He was like, you sure? Just kidding. But, yeah, but Emilio and Adam Smash, they run a group, super cool. People that we meet, you know, our rules are, you have to be honest. If you're really trading, you really trade. If you're paper trading, you say you're paper trading. You are honest about what you do, what you present. If you're transparent when you trade, like showing your trade on the stream, that's one thing. We make all of our groups and our affiliates agree to a random spot audit. Like if you make a call out, we have the right to say, hey, prove that you made that trade. And that way we verify that everybody that we vet for and work with is really doing it. Of all the crap out there in FinTwit and all the crap out there in the world, you can guarantee that anybody that I say check these guys out, that they've agreed to let me look over their shoulder and make sure they're not lying to you at any point in time, or we can cut them like that. So just know nobody's been able to do that. Who out there is real, who out there is fake? Everyone that we work with will at least be honest. They will tell you they're paper trading or they're real trading, but they will tell you straight up. So that's what we're going to do for all of you. We're going to bring them onto our stream. We're going to interview people. We're going to have tons of people here. We're going to build this stream up. We're going to do what FinTwit and what YouTube and what everyone's always wanted to do, which is create an accreditation system. Like, essentially, I'm looking at Spire here. Essentially making sure that there at least is a network out there that at least someone's looking out for y'all. Nasdaq resilience not holding up too well. So let's just make sure the market isn't going to sell off today. Keep an eyeball out. We lost that QQQ 275, so keep an eye out on 272.5. This is where bull structure hopefully holds for the month. Accrediting system. Did I say that wrong? Accrediting? Let me Google. It's been a long time since I took the SATs. Accreditation. It's a big word. Daddy's struggling, all right? I'm still sweating out most of Denver. Denver was a non-stop party for like 10 days. With the new MHP month and how you may look at stocks? Yeah, absolutely. So the third Friday of the month is where we look for, and let's do a quick monthly map on SPY. Okay, this is one thing we want to do, which is very important. We call it a monthly map. And a monthly map, we did one last week, and this is going to show you, remember, we talked about this last week, right? So a monthly map is something that you can do with Rocket Scooter, and I'll show you how to do it. In the monthly map, it shows you where, on a monthly scale, where positions are likely to be. So if you guys remember on Friday, we had a lot of resistances, right? As you're pushing through those resistances, we noticed that we had a distribution that was purely bullish and purely bearish. It was clean. Once it becomes clean, the market's less volatile. And so we knew that after Friday, we're going to have kind of like somewhat of a bullish like freedom for the market to move higher, but it could possibly dip down in there. So let me draw what that looks like. What you see is the red is going to be bull side the way we draw it, right? So here, you know, it's bear, bull, bear, bull, bear. It's like there's a lot of like junk, and you see how it like bounces inside of that junk. But down here, it's freely bullish, right? It's balanced here, and it's bearish here. So the market can sustain like a 360 drop and still be bullish. Should we all see that? On ours, we draw the colors the other way around. And let me show you on Rocket Scooter how you do it. So every day you got to come up and redo the map. Then one of the new things we're going to do is put this monthly map on the actual charts for you automated. So to do it quickly, I'm going to bring up the Classic app, which is a mobile-friendly light app that we made for you guys. That this actually, you can get all the numbers very quickly. Like, see, looks like a telephone right here, cell phone. People call them telephones anymore. And you can actually type in the thing you're looking at, SPY, for example. And if you guys don't know what it is we do, we actually show you where market maker and institutional positions are. Nobody does this. Nobody. We have a special technology that will reveal this to you, and I'll just show you how to do it. Monthly, third Friday of the month. We just passed through monthly expiration on the 21st of October, so now we're going into what we call a new trading month. Third Friday of the month is a new trading month, or the fourth Monday. So the 18th is the next one we're looking at. And so we can come here and plot what the 18th actually looks like. And let's go to like an hourly chart, 4-hour chart actually. No. Okay, and so you can see that there's a clean split between 348 and 320. That's beautiful, and that's what we wanted to see. So what I'm going to do is I'm going to come here and I'm going to put this at 348. And again, we draw ours backwards colors, and I intuitively want to think green is up and red is down. But we think of like green as support and red as resistance. So we're squeezing up through call side. It's just to show you that you're moving against the market. I mean, it's for contrast. So like when green candles, we just put them against a red background. So the only thing of the colors, red doesn't mean down. In our world, red means up. I know, we're weird. So I'm going to draw 348 right here, which is just showing it's cleanly bullish at 348 and higher. We are for a month, so a month out. You could sustain a dip to here a month out and still be in bullish positioning, which is fantastic. Normally in a bear market, you will see puts above where you are in the money puts, and that gets hedged lower, and that's why markets tend to sell faster in a bear market. You have 320 calls on this side, so there's a nice clean split. Make this green. You can use our app to do this manually. You know, sometime in the month or so, we'll be doing monthly maps on your Rocket Scooter platform as well. So I still manually do them for the time being. You can come in here and type other Fridays. I don't know if we can actually get that day. Yeah, we only do a month worth of SPY data. So let me go back to a month. So we're still in October. Let's do the 28th. And let's draw that split there. Again, 360 on the 28th. Just here. Okay. So I like to see that the bull side is higher here than it is here, which means the support is a lot closer, which is good. 350 here. Okay. And let's go ahead and do, we're at 24th. Let's do the 26th, which is Wednesday. And we also have expiration today. 402. No, hold on. 64 and 60. Right, so I'm just drawing the splits where the bull side and bear side is. And this is going to let me map out my trades for the month. My stripes, hold on. Let me talk to these guys. $60. And then let's do today. 24th by itself. So see how 24th is a little jumbled up for today? Let's draw that 375 and higher. Okay. Wait. 374 is a resistance. It looks kind of jumbled up here. 370. Oh wait, hold on. Okay, like really up in here. I got like 374. 373 to 371. You guys see what I'm doing, right? I'm just mapping out where the bull and bear. So these are market maker positions. You guys, what is he marking on the chart? These are actually market maker positions. Our technology. And by the way, there is a free trial with no credit card. You literally have nothing to lose. You type in your phone number. That's it. You can get our platform and our calculations to try for free, and you can play along with us. You want to add some market maker positions to your diet? That's what we're here for. Apart from me being goofy on the stream, if you guys don't know, I'm a Full-time trader. I've been trading since 2010. I'm a former chemical engineer. I worked for Dow Chemical. I ran oxidation reaction monomer units. I'm a professional nerd, despite how cool I look with my fancy haircut and my razor sharp part. I certainly spent more of my life buried in math books than I did doing anything else. I love data. I love correlations. I love building tools. I'm a programmer. I wrote most of the code myself. A hobbyist programmer. So I've always just been a person who liked to build stuff. And so we built a new series of tools that was going to be very helpful for traders. And what we created was something that will... I'm actually going to mark all my gaps here. We're going to mark them as well. Just kind of going to show what the SPY is going to look like as far as gap fills go. So we built a series of tools that now what we actually do is we take options data and we look for market maker positions, and that's what we're showing you. We're showing you where at a certain point in time when the risk stops being bullish. Here's an example. SPY for today has bullishness and bearish resistance, right? There's two different zones of liquidity. Liquidity is between a bear and bull side right here and right here. So market makers are trying to find liquidity where buyers and sellers can buy from each other as fast as possible. Because every time you make a trade, you pay a commission and they make money on those commissions. So the more orders that we do, the better it is for them. So their job is not to be bullish or bearish. Their job is to pin. Hold on. Okay, hold on. They're calling me. I'll talk about it. What do y'all want to see first? Which one? Tesla. Okay, let me pull Tesla up on Rocket Scooter real quick. Tesla. So Tesla today is, we call it mean reverting, which is basically like Tesla's base is very liquid. Between 200 and 205, you've got bulls and bears just slammed right against each other. So there's really no bullishness or bearishness here as far as positions go. The hedging is clearly southward. 207.5 is that downward weekly gamma. We call it hedge pressure, and the monthly's at 210. So Tesla, we call it bear structure, which means when the market does open below that, you get monthly positions being slowly hedged lower. So that 210 level is going to be very important. That's also seems like the halfway point between the gap down. And that downward hedging is over the course of a month, which is the third Friday of the month. So until we beat that level, at least for today, Tesla's not going to find any ground. And actually being in the perfect liquid spot, which is between bear and bull positions, which is 202.5 right now. We usually say it's random from here. The only mechanism that moves Tesla is going to be people exiting whatever long or short they're in. It's looking to me like people are probably going to get out of the long side. But it's indiscernible here because, you know, when markets are liquid, and actually I was talking about that for you, asked me to chime in, a little speech on liquidity is that, you know, dealers make money off of the frequency of trading. The more trades that take place, you know, the more commissions paid up the ladder to all the pieces of Wall Street. So they really don't have incentive to push price outside of liquidity. They like to find liquidity. And we're in a very liquid spot where buyers and sellers are in close proximity. So to try to guess where Tesla goes from here, it's really hard to say, but it is leaning to the bear side because of hedge pressure. So I would say that if you lose 200 on Tesla, which is that kind of bear side squeeze, it gets a little bad. But I don't expect it to dump on itself today. There's no clear sign, but below, I wouldn't buy Tesla here personally. I was looking at it this morning just to see if it gapped down to some positive gamma, but it's just not a good spot for me to think that it's a good trade. So Tesla's balanced with slight negative bias. So 200 on the bear break, and then if we hit 207.5 or higher, I'm probably a buyer, but until then, nothing. So you got another ticker you want me to pull up? Today, Q's actually lost that strategic bull side as well. Q's also liquid. QQQ 272.5 is that monthly bull structure, positive gamma. And again, that lasts until I think November 18th is the monthly expiration. So when I say positive gamma, you guys, it basically means if everyone took their hands off the wheel and only the robots were trading to hedge their options neutral, the market makers, it would be more longs than shorts on just hedging balance. So when people say positive gamma, that's what we mean. It means that the algorithms are trying to push it a little higher, even if people are selling. So QQQ is still positive gamma for the month. So is SPY. So those look great. And then individual tickers, I think right now are just going to respond to prepping for earnings that are coming up this next week. So if you guys want to throw some more tickers at me, I'll maybe type them or tweet them or put them in the chat here, and I'll be sure to run them really quick, give y'all some numbers. Any more, Goff? Careful here.
Danny, you watching that? Yeah, I actually took the downside.
Today, make sure this is that level. If the market breaks 1225 and keeps going, we're gonna get a volatility squeeze, so be careful. Classic gap should have half gap too. Yeah, that's a good point. So back to the monthly map on SPY, just quickly. Yeah, I'm drawing my gaps really quick because we're gonna talk about monthly map in just a second. Delete that. Oops. In this environment, the market's going to still try to sell, but I think that every week you're going to see people still trying to sell. That's been the popular trade. It's not going to be an easy walk up if the market does have a bull wave till the end of the year. It's not going to be like green, 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 green. It's going to be trying to sell, trying to sell and squeeze, trying to sell and squeeze. So I'm going to do gap fill, gap fill, gap fill. I'm going to show you how I'm going to plan out my SPY. Yeah. Oh, I just heard Goff say SPY resilience. I love it. I love hearing that word. Okay, let's pull rocket back up. Just check the intraday really quick before we go back on the lesson. That's good. One of the things I would keep an eyeball out today, we look at the VIX and the VIX's own hedging. The market's testing volatility, I think, going into earnings especially. There's a very key level on UVXY, 12.25. That is, that's where VIX starts hedging itself into a very scary spot. I think it's going to test it today, and I really think every week we're going to open up and Wall Street's still going to try to sell every pop. And basically, it's even if it does become somewhat bullish or squeezy in general, we're going to see people try to sell the market. So we're not going to get like gap and goes and gap and goes. It's going to be a very choppy ride up. But I think the way it's traders that we'll probably be looking to see is sell-offs get rejected and continue to squeeze higher. So I think at the start of every week especially, we're going to have to watch the VIX very closely to make sure people aren't expecting volatility, or volatility isn't you know, squeezing the market higher or squeezing the market lower. So like that key hedging level is 12 and a quarter on UVXY. We use UVXY for one of our calculations. Very important that we use that instead of the VIX options themselves. So just trust me on why we're looking at this number, but keep an eyeball on that one, because if we break that and keep going, the market's going to lose a little bit of liquidity here. So it could be really scary for all the index stocks. So yeah, and SPY and NASDAQ are both looking a little gross right now. So keep an eye on that VIX level though, because it could get worse for sure. Double checking this. I'm wondering if I should cash out on. What do I wonder if I could want to add to like.
If I get filled, I'll take it. And
24th. Oh, that's today.
back in.
Yeah. I'm gonna do. right. So I need to make a decision right now. As a matter of fact, I've got my SPY 375 calls that just jumped out of the money, and actually they expire today. They still have a lot of value in them because of when I bought them. So the idea is do I just... We're sitting at a spot where if these don't go in the money and stay in the money, I'm out. If we start losing hedge pressure and start trading out, this is a good sign. I probably should close out with whatever value still have. They do expire today. I was really happy that they were running, and then as I was talking, we were pulling back. So 374 is a key level. Let's watch and how I'm gonna do this trade. So this is where my stop is. I just want to free up that bind because they will expire worthless. There's about 5 or 6 grand, I think, tied up in it. And you have XP on hedge pressure break, yeah. Yeah, this one I need to get a different expiration. So yeah, I'm gonna give it a couple more ticks on here just to see what VIX does. Let's look at... Okay. Man, Nasdaq breaking down to the bottom side of that band. Ooh. Okay, there's that red line on Nasdaq. So there's one particular area I'm looking for it to support. Did we get that doomsday number this morning, mods? It's 0.7. Well, yeah, so we did hit the upper band. It is 0.7. Okay. So when you hit that upper band, which is exactly what Doomsday shows you, that's good, 0.7. Let me talk to my team really quick about this. Okay. Like I said, I'm contemplating closing my 375s. I'd like to see them in the money, though. If they're in the money, I'll hold and close. If the market squeezes for us today, I'll hold until close because I do want to make a profit on them. Seeing 375 in hedge pressure made me happy to see this, but we are getting volume and then volume to to the downside. This is not a good sign. I'm going to start rolling some of this out. As a matter of fact, let me close 10 of those. I'm going to just go to market. Let me dump in the market. Okay. I'm just closing out. Okay, I closed 10. I still got 29 open. Just putting some of the profit in my pocket, but boy oh boy, I'm really telling that expiration. They expire today. So while there's some money tied up into it, they will expire worthless if we don't get above hedge pressure. And of course, losing a buy strike is not that good. Okay, so yeah, SPY, right, so losing hedge pressure, what you look for is while the market is trying to hold itself on the bull long side of things, we have been seeing some unusual selling volume Hedge pressure predicts volume spikes, which you see right here. And that unusual selling volume, as soon as volume declines, whatever side you're on typically carries the rest of the day. We got that leading indicator today, as you guys see, when resilience went negative right here. We have a video on resilience. I urge you all to watch this. We made this video. It's really good, and resilience showed before we lost hedge pressure that we were likely going to break it. So I want everybody to watch this video. It's like 7 or 8 minutes long, and it will detail what resilience actually is. It's the indicator you see on my chart, and it's a leading indicator that can forecast SPY filling its gap before it does. When this white line goes below 0, then this white line becomes resistance, and even here you were getting that prediction. We heard Gav even say it on the stream this morning. Goes, oh, that's SPY resilience. He was talking about our indicator. When resilience is negative, right here, half gap becomes resistance. So today, even if it moves up to here, I want to see this white line above half gap. Okay, that's what I want to see. Now we are going to test volatility for the week. I'm still in the boat and believing that we're bullish. So while I did trim out some of my position, this is a scary spot. Now I want to see us lose this level, retest it, and then start to fall. So the trick is when you hit hedge pressure, there's always a predictive volume spike. You guys see this? Hedge pressure predicts where volume will be for anything. That's what it does. None of your technicals can show you where volume will be. They'll only show you where volume was in the past. The highest volume of the day, despite one single sell candle, is going to be at either half gap, hedge pressure, monthly hedge pressure. Open and close is always high volume. You touch half gap, there's always volume. You touch hedge pressure, there's always volume. That is the net maximum order flow. Unusual order flow. You guys might buy a service out there that tells you when unusual order flow is happening. Look at that unusual order flow right there. But we showed you at 9:30 which level it would come at. We get hours ahead of all that unusual stuff. We're the next level of what that stuff wants to be when it grows up. So you guys want to hear the sound of you canceling all your unusual order garbage. How about knowing where that unusual activity spurs up from the start of the day? It's very easy to calculate if you know what you're doing. Well, not really easy, but like, this is where the volume is. So I want, when the volume goes away, which side of hedging am I on? So as the volume is declining and VIX is above here, is not a good sign for my bull trade. Market's gonna become unusually volatile, possibly from this. Does everybody understand what I mean about volume? In some angles, I look like Tony Stark. You know, there's a funny thing we did back in the day, and I need to find those pictures, but back in the day, somebody said I look like Robert Downey Jr. And I was like, I mean, brunette, white guy with a beard, we all kind of look alike. And I made that joke, and everyone was like, oh yeah, you kind of look like this, kind of like that. So what we did was we put a bunch of like celebrity faces next to me, and I tried to like imitate their look. And we had like Jim Carrey, Jimmy Kimmel, but basically like I looked like all of them from different angles. Like I was like moving my head around, and I'll find those pictures and post them. It was actually really funny. We did it on one of the streams last year. But the most thumbs up I think was Robert Downey Jr. But I had to make the face like from whatever angle. Like head on you, like a little deep fakey. Hi, Matt's the real deal, everyone. Thank you guys, appreciate it. If you look at NQ resilience, it's higher than half gap. Which one do you give priority to? You always give priority to half gap. The white number always outranks the yellow number. Because the day-to-day imbalance is we call redistribution, right? Essentially the day-to-day imbalance is what creates the gaps. And so that is the most recent sentiment. Monthly hedge pressure is built over months of positions being held. Like who buys monthly options? Institutions hedging a position they want to hold for a quarter, right, to get dividends. So that's pretty much hedged as you go along day to day. This is like that instantaneous change from one day to the next. So because half gap is related to the open and closing price, half gap is the middle. Resilience goes over that. If you guys watch that video, we'll cover it. Half gap being in the middle of yesterday's open and close, and that's typically the highest volume of the day on any stock. Pick a stock, I don't know, Apple, right? Of course, Apple has 2 A's, so don't spell it that way. Since that's the highest trading volume between the 2 days, the open and close, the half gap is the most relevant current understanding of that market imbalance or liquidity of the day. So the highest volume being the opening price and the closing price, half gap being very important to hedging in the instantaneous moment, half gap resilience, which is the white number, which is the tiebreaker of the half gap itself, is higher priority than monthly. So when they disagree with each other, the white one outranks the yellow one every single time. They do not ever violate that rule. White is always better than yellow. So when you see them like this, the way you interpret resilience is very simple. At any point in time, you're going to draw 2 arrows. If white number is below 0, and actually, we can actually draw it like this too. I had this idea to graphically draw it like this. Let me talk about this on the podcast really quick. Yeah, it looks like today, I heard you say earlier about resilience. We lost that on SPY, so SPY lost its half gap. But right now, we're actually looking at SPY resilience flipping positive, and that 375 level is super key today on SPY. A lot of stocks are really holding the fort, even though some of them are dumping this week. I think in general, I always like to believe that the SPY being more diversified is a better view of the market than the NASDAQ. You know, Tesla pulling the NASDAQ down and NVIDIA trading down and things like that are kind of losing the market, but you have some really stable stocks. GE is looking fantastic. It's a gap and go. JP is still trading above at yesterday's close. So a lot of the sectors are still pretty strong while some look weak, but that volatility is that UVXY level we were talking about was being tested today. So 12.25 was where we're at. We just tested it. So I want to make sure that that's very important to watch today. So if we lose 12.25 resistance on UVXY, that'll represent hedging in the VIX. And if VIX goes lower, market will tighten up. And I think we'll survive any downturn today. So keep an eyeballs on those levels. 375 SPY, 12.25 UVXY. Whichever one breaks first, we'll probably start a chain reaction for the day. Plus, we have expiring SPY options for today because it's Monday. So watch out for random squeezes that surprise the market today, especially volatility dries up. Could be a squeeze up. I didn't like this, so I had 39 SPY calls and I closed out 10 of them. So I closed them out, and they're definitely making money, but being threatened. If they were in the money, I would hold for the whole rest of the day. But because 375 is the strike, if we're below here and they expire today, they expire completely worthless. Okay. So I lose everything. So I took some profit right here, which is the smart thing to do. Do you guys all understand why I took some profit? Everybody? Losing one strike on hedge pressure with volume was scaring me, right? That volume did not survive the market. And when volume declined, I closed out a quarter of the position. I still believe in the bull market, which is why I held on all of it. I'm willing to risk all of it to bet that we stay on hedge. So that's really good. If resilience, though, doesn't get above 0 in the next 5 or 10 minutes, I'm going to close everything in SPY. Okay. Does everyone understand that? Okay. Oh, let's check my JPs today. JP's still killing it. All right, good. But okay, let's get back to monthly map. And again, I want to show my position on the chart because, and if you guys like that, you know, we live stream with real money and show you all the trades that we're doing, feel free to like and subscribe to the stream because very rarely will you see people live trade with an account number, P&L on the screen, and showing you guys everything I'm doing. I've made no new entries today. I've only closed out some of my SPY, and I hate trading option thinkorswim. No offense, but trading option thinkorswim is just so cumbersome. It's like trying to ride on the back of a stegosaurus. It's like bumpy and sharp and bleh. Never easy. Okay, so back to the monthly map on SPY, right? Do you guys all see that over the course of the month, when I did that with the old, the classic app, you can see that you can connect the dots from here to here, from here to here. Actually, let's zoom out a little further. And what monthly map does, it shows you how liquidity is positioned already for these expiring days. So this is actually forward looking. It looks into the future at those expirations to see what the market is doing. And I want you guys to all go to the link down below in the comments if you've not tried out Rocket Scooter, and we'll show you positional risk analysis. It's a whole different way to look at markets. See, I don't have technical indicators on my screen anymore. Much simpler, much easier to see, much easier to understand, especially if you're newer. Simple things. Bull side of market. Don't look at any indicators that tell me that. Bear side of market. And this is where people's positions are. Okay, you see that? So it's kind of like over the course of the month, I can expect that even if we fall to here, we're bullish. So if I want to buy a put, for example, and I want to bet that the market, or say an example that I'm longing SPY, right? This is how this works. If I was a long SPY, just buy the shares itself for my retirement account. Let me close out 10 more of those SPY calls because they did just push a little higher. Let me sell. Actually, let me sell 5 of those. Let me double check resilience really quick. And it's easier to trade on your phone with Thinkorswim than anything. Oh, res is positive. All right, I'll just hang on, whatever. I won't be a little bitch. Right? I only trade TOS options on mobile too. It's really weird. It's like copying and pasting something in the DOM and watching it like this. That's so you guys can see that I'm in the trade. But yeah, closing the position from your phone is so much easier with Thinkorswim. It's really cumbersome, and I hate doing it. But that's why I want to get Rocket Scooter trading also, so I can do my trades on my own platform. So, by the way, and the name Rocket Scooter is a nod to the engineering background of the founders of the company. The 3 original folks that started our first podcast was called Day Trader Paradise, which is the podcast we ran, and I live streamed as well. All 3 of us were engineers, so engineers turned traders. So you guys see how there's a difference in zones, bear and bull side here. So say I was long the SPY and I wanted to buy puts, and I intended on longing the SPY over the course of the month, okay? And I bought the SPY and SPY was going higher. And say I wanted to buy the dip because I'm doing cost basis averaging. I'll buy the dip as the market falls. But how low will I buy that dip before I'm scared of the market? Well, as you see, a dip to here on this day is still bullish, and that day is still bullish, and that day is still bullish. So if I want to buy puts to protect my longs, I know that I want my puts. If I want to hold for at least a month, I'll get my puts right there, just in case we lose the bull side and we're in this giant illiquidity zone. I wouldn't buy the dip here, but my puts would kick in and give me insurance a month out. You'll see how that works. Because I'm expecting the bull market to either, let me pick a different color that's not green. I expect the market to sustain the bull side, or sustain the bull side, or sustain the bull side, or sustain the bull side. If I'm long and I want my insurance, and I want to say, well, maybe I want to swing SPY long for the week. Okay, so a week out, there's my puts. So as we're trading higher, my SPY's making money. This strike on this day becomes cheaper. These puts are getting really cheap because we're going out of the money. So I can buy super cheap insurance today, hold my SPY for a week out, and now buy puts. Or I can get into a credit spread. So what if I had SPY calls from Friday? Calls are in the money. And say that I want to, well, let's say a credit spread. Say that I wanted to, calls were in the money and I just wanted to protect my gains. I didn't want to stop out on my calls, but maybe my calls expired here. Say they expired and put X right there. And I just want to make sure that I bought them here and they're making money, and say that I had, whether I'm in the money or not, so they're making money and I want to protect them. Well, I can make sure that on that same day, I can actually long some puts there. Because that's where I'm sure that the market's no longer bullish on that same day. So you can be clever, 1,000 different ways to do it. You can protect the insurance you have. You can buy some SPY puts, some SPY calls. So if I wanted to buy some, say the market's bearish and I want to buy some SPY puts for a month out, where would I buy them, right? And you can see that a month out, this is the bull side. So what we don't do is bet that you go from bear side to bull side without a catalyst. We don't bet that you break this way. Well, I don't. It takes a lot. I'm talking like unwinding billions of dollars for that risk to be lost. So if I wanted to bet and buy puts just to day trade, if I wanted to just day trade for like Friday, I would buy puts that are like right here, one strike above that bull side, because I'm going to bet that the market doesn't flip bearish, but the worst case scenario, it tests the bull side and bounces. You guys like that? Does that make a lot of sense to everybody, right? You don't bet that the bull side crashes or the bear side squeezes. You bet on the worst case scenario in what we call bull market. When you are above call walls, it is a bull market. There's no other way to say it. Keep an eye on resilience 7 still. Market's still looking okay today. So if I'm going to short the market, I'm going to short to the edge of the bull side and take profit right here, close everything. Type yes if you understand that in chat. If you want to go YOLO for the break, the chances of jumping from one side to the next, empirically, which doesn't mean anything, but it's about 4% of the time. On this day, jumping from red to green and staying on the green side happens about 4% or so of the time. And it takes a catalyst really to unwind all those bulls at the same time for the same reason. Most people hold their positions. They don't flip-flop all day, every day. So most of the institutional positioning is done at the beginning and end of the day. So in day trading throughout the day, you don't normally see the bull side being lost to the bear side for long, which is why I didn't push out of all of my trades, right? I just closed a quarter in the zone for money, and now, a quarter of them in the profit. Can't talk today. A quarter of them while I'm still making profit and I'm in the money now. So that's good to see. I'm going to bet on that without a catalyst today that we still stay higher on this. So I'm going to hold on to the rest of them until they expire. So in the monthly map, again, when I'm betting on my trades, I don't bet that the market's collapsing. And you know my post where I say we don't find lower lows for the end of the year? Can anybody tell me why I said that? Let's see how much you... Anybody see why I say that? If you can guess on here why I think, okay, let's start over. Why for the rest of the month, I don't think we easily go to lower lows without a surprise catalyst. If you do that, I'll give you, you answer that question right and you're not already a lifetime member, I'll give you a 30% off of our lifetime membership. If you guess this right. Oh, I'm not calling my name. Dude, thanks, man. I appreciate it. They're talking about rocket scooter on the podcast.
How those sort of levels work.
Absolutely, man. I definitely appreciate the plug. We worked really hard, building our software, and especially in this mode, we've all been kind of married to a bull market we've had for such a long time. Oh, hey, Aaron, what's up? I just saw you pop up here. The idea that understanding where people's positions and risk are in the market can kind of dispel what the lacking that most technicals did have, which was technicals show you what the past has shown, but it's not showing you where people are positioned. And so liquidity map is what he's saying is our tool that we have, it's called Roxy, it just shows you where bull and bear positions are and where liquidity is. And we use that to add to technicals and add to fundamentals to get an even a third layer to understanding where the market's going. It's where people's positions are. So despite what we try to make an assessment off of fundamentals and an assessment off of technicals, positional risk is what we call it, but liquidity map, it shows you where people are actually positioned despite what you feel or think about the market. So it's like looking over everyone's shoulder and just seeing the bulk sum of where everybody's betting. It makes it a whole neater way to look at it. And yeah, like I said, there is a free trial. And I'm not trying to make this an ad, but I really appreciate you saying something about it, because
Trying to make it like an ad either. I was just saying thank you for it. I don't want.
Absolutely, dude. Yeah, and he's not. So that really kind of was flattering. I'm probably blushing on my stream right now. So appreciate it, man. We love you guys. But yeah, definitely looking at it. And when we talk like the hedge pressure and things like that, they're different ways to see the market, and it kind of opens up Fibonacci's especially. Those type of analysis are good when you enhance them further. And our goal was to try to enhance where the flaws were in technicals by showing the positions on top of it. So absolutely appreciate it, man. Thank you. That was really sweet of him.
I don't know.
Okay. All right, let's do Q&As really quick. Does anybody understand why I say we don't find lower lows, but not just as a guess, But really positionally, why don't we get lower lows for the month? Let me read what you guys are saying. Market's still liquid. Well, yeah, but not exactly why we don't find lower lows for the month easily. The S&P's 3-month realized correlation, the highest weighted stocks, the index moving relative to each other. That I saw, Owen. Bar chart, I think, posted that and I retweeted it. Fantastic to see. Come on, SPY. Hang in there, baby. I'm going to trim a little bit more. Let me sell 8 of them. Okay. When it's challenging and not holding, resilience is back to being below 0. I just closed 8 more. My position is still, like I said, I'm going to burn this. They expire today, so I can't be super heavy in them. Now I just have 21 left, which is fine. That's okay. No put walls. Whoa, keep going. If you're not, like I said, the first person that messaged me and says they get it, I'll give you a little 30% off our lifetime. Just today. Just for today. Just as a bonus. Only if you're not a lifetime. Because I'm answering it in 5 seconds. You guys ready? And by the way, the free trial link is in the description below. You don't need a credit card. You just sign up, check it out, play with it. You guys can use our same calculations, and I'll show you how the scanner works in just a second as well and answer any of your questions. Make sure you like the stream if you guys are having a good time here. Appreciate all of y'all being here. It's because the bull map is there. And it's not lower lows. That's how I do it. Before I get my old Babe Ruth up in here. Look at that. The lower low is at the edge of the bull map. So it's going to take a major event to find lower lows. And that's why I say that. Nowhere in the month are we not in bull territory with lower lows. We have to go to bear territory, and actually sooner. Bear territory is much sooner. It's here, 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 and here. So you can see the little split, right? And that's how I make that's how I time my options and time my calls. Let me just zoom in right here.
Not really, man.
Is that Luke?
Where we're going to be heading.
I have Luke.
Q4. I think that right
No, that's Alec. Okay, never mind. They sound alike. I was like, Luke.A is one of my favorites. So bear side is here. Oops. So over the course of the month, it's still bullish. Higher lows, or basically equal, double bottom. So for me to say the worst case scenario is my thesis is this: without a bear catalyst, even bear market or bearishness or selling still is bullish above the low of the month, or the low of the year actually. So that's why I make that call. And this is the old map. Let me delete these old ones. You guys see that right here? Does that make sense? Everyone, does that make sense now? When I say we don't find, in my tweet, that's, so when I tweet stuff, the difference between, I guess, maybe me and maybe other traders, I don't just make up numbers. Everything I do, the time and the price are very important. Okay? Everything I do. I longed and shorted at the top. This is back in the day I bought the you guys remember back in July when we bought them? My old pin tweet was we bought them out for 2 months. And I long and sold at the top. Everybody remembers that. That was a really awesome month. Or 2 month. And it was basically the 2 month relief rally we had in July. And we made a whole post just like this one. Read below, yada yada. And this is actually, this post is going viral. It's got like 60,000 impressions or something like that already. So I'm excited to see everybody. Yeah, here it is. Oh, and I promoted it too. It was starting to get a lot of impressions, so I was like, let me just push that promote button, get more people to see it. So if you guys like the post, feel free to come read it. It talks about the two major parts of liquidity fundamentally, commitment of traders, employment numbers, and forecasting with what we believe the Fed's going to likely do, and then talking about it. So the idea is that when we make the tweets, and I make the tweet and post it, why did I say I'm calling a bottom for 2022 and a rally through mid-January buying? But why am I saying we don't find lower lows? At least for now on the liquidity map, monthly mapping, it can fall to here and still be bullish, here and still be bullish, here and still be bullish on this day. So at least for the month, the worst case scenario to still be bullish is to fall here on this day. And this is not lower lows. And that's why I say that. So, and I tell you, if the mod was in here that I was talking to the night before, this day I got on the phone. I don't know if you're here, DW, feel free to testify on the accuracy of this. I called you the night before, just chit-chatting about, you know, Rocket Scooter and stuff. And we were like just talking about what do you think the market's going to do? And I say we're going to flush and then reverse. And we flushed and reversed. And I said that here that I was expecting a flush. And I think that day we talked about it, we got the flush, and I loaded up that morning. You guys remember I talked about it. I'm loading up, I'm buying everything. I bought the JP Morgans. I bought everything earlier in the week. I think I bought like JPs and Apples all back in here. And when we dipped is when I loaded up. I bought those SPY calls. I bought all kind of stuff right down in here. Yeah, because math. Just like that. And so the reasoning for that is that just over the last month or two, if you guys have been looking at all my other streams and talks, we talked about the market just being too liquid to outright crash. And I started saying as long as we get upticks in the unemployment data, that the market would rally because bad news is good news. I even have a video in our Discord, which by the way, the Discord link is below. We have a free Discord. It's massive. We have huge, one of the biggest Discords out there of active members. And it's most of the rooms are free. There's a whole members area, which is very rich with stuff to learn from, but there's at least a free area you guys can kind of partake and hang around with. But even so, I have a video that I made in our advanced videos called, and this won't be accessible to everybody, but it's called Bad News is Good News. Did I upload it yet? I know we had a session on it. Let me see if I can find it. Oh, you know what? I did not release it, but we did do it live. So let me see if I can find it there. Quick. Oh, here it is. It was on. I'll just show you a picture so I want you to see all the recordings, but this is looking good today. I filmed this video on October the 3rd. Bad news is good news. And I talked about my thesis on October the 3rd about the market reversing, which was here. I did. Right here. October, here. This day right here. Bad news is good news. And the bad news on the unemployment data is good news for bull market. You can easily say we are in a recession, yes, but we are in a bull market because we are on the bull side of liquidity. That's it. Easy as that. So bull market still sustains and doesn't find lower lows, which is why I say we don't crash through the year and we rally through the year, because even over the course of the month, it's freely bullish. Even with the dip to here with bad earnings, it's not bearish until we get way down here. And of course, bearishness starting on this day or this day still won't find lower lows. So if we have bad earnings coming up in this week, which we don't have any majors, I think this week, they're all next week. I think Apple is the only one is on the 27th. Yeah, Apple's like Wednesday or Thursday, I think. And if you guys like the stream, feel free to click that like button. Subscribe to the channel. We're live every single morning. The tweet is what brought you here. Found you this weekend, followed right away. Thank you. Hey, appreciate it. The thesis is very clear. The evidence is there, and I'll show you live. Actually, let's show you really quick because I don't want you to bore you guys with fundamental talk. But I do keep... Let's go here really quick. Missing. Let's look at... Hold on. So we're going to do the weekly unemployment claims, or jobless claims, right? Let me pull it up really quick. And it's a very simple thesis, and it talks about it in that particular video, but also in the tweet, we also make sure we put that there as well. So in the tweet, you'll see that you had those upticks in January and upticks in April. And now once we had those upticks in the first couple weeks of October, that's why I made that prediction. Because really, you know, the Fed is like driving their hawkish policies based on the idea that the market's liquid enough to handle any bad news, which we do know from the commitment traders. There's another thing we look at. Without boring you guys to death too much on the COT report, it's also in that tweet. It just shows that market makers are long, which markets don't crash when they're long ever. It's never happened once. Why would it happen again? And number two is that the market just is very liquid. Bulls and bears are finding each other very easily here. Bears are taking profit very rapidly to lock in profits for the end of the year. Bulls have been selling since the end of last summer, or 2 summers ago. So we have sellers and buyers finding each other in a grander scheme. The market is too liquid to just outright crash. There are too many shorts covering for profit to lock in their bear profits that is absorbing the impact of all the selling. And so you're just not seeing the market collapse on itself. Easiest way to see that on the COT report is right here. Green line is asset managers, blue line is hedge funds. When the green line is selling and the blue line is covering, the market is liquid. Even when we're selling on QT news from last June, the market was selling as fast as it ever had sold, and we still rallied because there's enough shorts covering. Buyers and sellers find each other. Liquid markets do not crash. This is the #1 rule, and I have a video I made called Liquid Markets Do Not Crash. So and if you guys go to this report right here and just write this down, you will learn the best thing you ever learned about reading the market on a grander scale. When your 401ks and mutual funds and IRAs are selling all your stock against all the COVID shorts squeezing in panic, as they have since the election did not produce a president that shut the world down again, shorts are like, oh fuck, let's get out of the trade, cover into selling. So buyers and sellers are like finding each other at the top very easily. And with QT typically causes a bear market, look that we didn't collapse the market because sellers and buyers are finding each other. Rule of thumb, ready? Green and blue lines, pinch or push. Market is liquid. When they're parallel, market is illiquid, and illiquid markets will crash like nobody's business. Okay, when they're a different color. Again, parallel, illiquid, pointing or pinching or pushing, liquid. So you can draw this and very similar. Now this is COVID catalyst. Get rid of the catalyst idea, but here they are pinching. Here they are parallel. Parallel markets sell off. Here they are pushing away, and now they are pinching. Liquid, liquid, illiquid. Once they started diverging, I started looking for bottoms. We didn't get the unemployment tick up, so I didn't call the bottom in June. I called a 2-month bottom, which we got. That was the first tweet. Now I called a bottom for the year because they are pinching and pinching, and now pushing away from each other. That's #1. #2, market makers. If the red line is positive, in the history of this report over the last 20 years, the market has never crashed, even in the big Great Recession, until this red line is negative. Market makers will not drop the bid on themselves when they hold the inventory and they control the price. Why would you accumulate all the thing we're selling to you and hold it in your pocket and then devalue it and shoot yourself in the foot? It doesn't happen. It didn't happen with the mortgage crisis. They held all the mortgage-backed securities. They bribed Moody's and S&P to literally rate these bonds as diversified and worth something until they can gobble up everyone's credit default swaps. And then once they were short the housing market, then they stopped bribing the reporting agencies, and then the market crashed and they were short. Dealers do not let the market crash until they are short. So obvious. We've been selling everything to them, and they've been accumulating all the stuff. Dealers are normally net negative because more bulls and bears always. Bulls, green is bulls, blue is bears, red is kind of the offset. And forget about the yellow one for now. It's a whole nother thing. But in all honesty, the easiest way to see it is those two lines. And as we've been selling and they're both parallel, everybody's selling. That's the moment when they're both parallel that the dealers are grabbing the bag that we're shorting to them, or shorting against them and selling to them. And now they hold the bag, and now the bag is positive, or they're positive. So they have to go back to being negative before they're going to let the market go lower lows. And the only reason I'm basing that is because that is how it's always been since the beginning of this report. 20 years of this data, the market has never crashed until the dealers were positive. And I say the market isn't bearish, the market isn't crashed. So believing that we'd find lower lows is not going to happen while the dealers are positive. The dealers started being positive, net positive position. I say net positive. So some of all reporting dealers are actually long the market. And they've longed the market here, and you see it's having a hard time breaking below. Because imagine that you hold all the inventory of something. You're in control of it. You gobbled up everything everyone sold to you, and now you hold it. You need to find people to buy it from you. You have two ways to go. You can lower the price to incentivize buyers to come in, or you can raise the price to squeeze out shorts. And so you could come here and say, well, I have all the inventory on this red line right here. What do I do? Well, if there's already buyers, then I don't need to drop the price to attract them. And clearly this green line right here shows that there are buyers. People are going, the bulls are longing the market. So they don't need to drop the price to find buyers. Clearly buyers are showing themselves to like the value there. Number two is even here to here, shorts are also covering. You see that? So even in here, shorts are covering, and down here, longs are buying. So in between here are plenty of buyers. So they don't need to lower the price to find buyers and risk losing money on the assets they hold. The buyers are all existing inside of here, and that's how we do it. That's how we look. It's a very simple analysis. Most people don't do this because nobody trains you on that. We train you on stuff like this. So I'm glad you guys like it. Another thing is I was waiting for a couple of upticks in unemployment, because if you're thinking about how Wall Street works, Wall Street's betting everything on what the Fed's going to do. And the market is very liquid, which I just proved. And when you report something like quantitative tightening, the market becomes illiquid. People sell. Everyone sells and everyone shorts. Remember, the parallel lines become illiquid. And so the market was liquid enough when COVID shorts and quantitative tightening shorts were covering and buyers were selling at the same time. When Jay Powell announced QT at the end of last year, couldn't have been a more brilliant timing, because the market was as liquid as it's ever been. COVID shorts are getting squeezed so hard, the market absorbed the bad news because people were so frantically getting out of those upside down shorts. They were buying against the bad news. They didn't care. They were like, every dip they get out of my short. My COVID play didn't work. My hedge fund's underwater. Fuck, I'm out, right? So buyers and sellers found each other so easily. So now he says they're raising rates and QT, right? And if the market starts crashing, which remember we said liquid markets don't easily crash. They can sell, but they don't collapse. Any flush immediately reverses out. You know, bad news, the dealers will drop the price to squeeze out longs, and they'll raise the price to squeeze out shorts. That's exactly what I expected to happen. So, long story short, music. If the music's too loud, let me know. Long story short, the FOMC is going to raise rates or tighten only to the point that they don't collapse the stock market because of over tightening or making problems. Because we have inflation, the last thing you want to do is have a market crash cause rapid unemployment where everyone loses their jobs, and now we have inflation with major unemployment that's static. This opening and closing of businesses, you know, obviously is repaired itself. I don't think we go below post or pre-COVID highs until a worse fundamental thing happens. But I don't think Jay Powell is going to tighten and tighten and tighten into a market crash, because in stagflation, which is high unemployment, high inflation, you won't be able to just turn the economy back on and it run. Guess who we have to run to beg for money to dig us out of stagflation? If we start crashing with inflation and unemployment, see right here, we have inflation, but good employment, okay? Employment is good. Okay? China, yeah. Or the Fed, right? If we get stagflation, market crash, market crashes, people are going to lose their jobs. Easy as that. Stagflation, government's going to go back to the Fed and start begging them to print money again. Hey, man, we need a bailout. So imagine like the Fed is like a guy, right? Like with risk on his head. He has a lot of risk at the top. And at the top, the Fed was like, you know what? Let's just sell at the high. Let's sell a little bit. Market can handle it. We have shorts covering, long selling, market's liquid. Okay, cool. Let's sell to the liquid market. Let's take a little risk off our plates. But if we create stagflation, the government's going to ask the Fed to carry all the risk in an economy that won't recover overnight. So I think Powell doesn't have strong enough shoulders. They're not going to put pennies in their pocket to ultimately have to put mountains on their back. Do we get that? Jay Powell will not drive us into stagflation by over tightening the market just to take a little bit off the top while market's liquid. It's like a thing is pressurizing. They're going to take out a little bit. So it means it's like he's driving. We always say like he's driving a car and he's accelerating until like the car starts shaking like it's going to fall apart. Then he'll back off a little bit. Or he'll stop being so aggressive because he doesn't want to drive the stock market into collapse, or else the unemployment situation gets bad and everybody loses their jobs. It's a very easy understanding. So any bad news in unemployment, like people filing for unemployment insurance, means you got fired from your job. It's not just people not working. First-time jobless claims are people that got fired that month. You have to get fired to apply for unemployment. You have to get laid off. So these are people that go to the government and file for unemployment, right? Their company had unemployment insurance. They file for unemployment. They get on it. So seasonally, you know, unemployment usually goes up after holiday, seasonal labor, right? That's expected in January sometimes. But then in the summer, right, you start seeing a lot of people being let go. And again, July to August was a 2-month rally. I called that rally again because of the same thesis. I didn't tell you guys the thesis back then because I was keeping it secret, just so I can essentially place it in the middle of the stream and then reveal my trick. But that was the trick. Bad news is good news. So if the unemployment situation is going up and pretend you're like a firm, a fund, you're managing money, you're going to say, I was shorting the market, betting on Powell aggressively raising rates and things getting bad and market crashing, but people are getting fired from their job while market's stable and going up. I think I want to short the market against that. I don't think Fed's going to drive the economy or drive the stock market to zero and get everyone fired because they don't want to come back and put the mountain on their back to bail us out. Stagflation, you don't recover. That's Great Depression level recession. You don't recover from that. And the Fed is not going to come want to bail us out at that point. So anytime that's seasonal, and it's not seasonal, sorry, anytime you get people losing their jobs as a trader, you would say, I'm going to bet that Powell's maybe going to not raise rates as aggressively. We're going to 75 basis point might turn to 50 or a quarter. And what's going to happen at that point, right? People are going to buy on that news or cover their shorts on the news. Let me get out first because I'm a smart quant and I pieced that together, and that's exactly what you're seeing. When you get those upticks and the reason I use the jobless claims and not the non-farms, because the non-farms don't come out every week. You know, it's like a monthly scale on that. You know, don't get those all the time. There's more granularity, which means there's a little bit of noise, but in general, you can see that the trend is upward. So as long as that bad news is there, you can bet that nobody's going to bet that the Fed's going to be more aggressive. And that's the secret to the thesis. And if you guys like that, like the stream and come here every morning because it's free. And Rocket Security is a free trial. And we have all kinds of deals and discounts because we just launched our tools and our platform. And you guys are welcome to play with it and try it out because we're really glad you're here. We're really glad you're checking out what we've made. And our analysis style is different than what you see. But as you see, we're trying to think like a hedge fund and think like a market maker. We're trying to get ahead of what the Fed's going to do, not by listening to the news and responding, but by building a solid thesis. The two rallies we had matched that idea. Shorts will cover if the car that Powell's driving is he's speeding too fast and the steering wheel is going to fall off. He's going to not raise rates so aggressively. You would believe that as a fund. It's a very solid thesis. As a matter of fact, it's been accurate since the beginning of the year, and I've made some really hella good calls off of that, and I'm still making the same call off of that. And Wall Street's about to pick. The funny thing is nobody's caught on to it yet. How many times in your life you're like, man, I wish I would have shorted the housing market and been like Michael Burry? I've realized something that nobody sees yet. I realized it last year, or at the beginning of the year. I realized it in January, right here. I made the call and pinned that tweet for I said, here's to a 2-month bear market rally. And we got exactly a 2-month bear market rally. And if you guys remember, I was shorting Apple like the day before it turned around, right at the end of monthlies. And then here I call the bottom for the year on the same thing. I see something that nobody has seen, and now I'm revealing it to you guys. If y'all like that, thank you. You see something, and guess what happens when everybody picks up on it, right? That's my funny. I made a post in my Discord. I want you guys all go to the Discord really quick. I'll just put the link so y'all can jump to it super quick. Right here. And thank you guys for being a part of the stream. We love y'all. In Discord. Very, very high, like a lot of participation here. I said, oh yeah, I said, hopefully my bottom call pays off. They say you're crazy when you see something they don't. They say you're wrong when you're first. Then they finally get in and jump in on your trade when you're already up 700%. That's the thing. Once people catch on to this thesis, by 7,000%, right? You're already in, and that's the big game. Not saying that this is investment advice or trading advice. Please understand, I'm some random nobody from the internet. Do not base any investment decisions off of what I'm saying. Okay? Don't do anything. Freedom of speech allows me to talk about anything I'm doing for myself. So don't go in there and base any of your trades off of what I'm doing. They preempt you on the legalities there. But understand that my job is to, as a trader, try to see something that nobody sees yet. So that when everybody sees it and jumps in on the trade, I'm already in the trade. And that's where the real gain comes from, right? So hopefully it catches on over the rest of the week. I'm glad you guys are here. I'm gonna call it a day. For now, what we do is we're gonna have a session at the end of the day like we always do. We're gonna do a recap. I'll talk about some of the things I wanna do. Hopefully 375's in the money. I'm hanging on to my SPY. How much money have I made today? Or how much money have I made on this P&L since I've been open? I'm down 2,500 today. I was up like 40K last week. 40 something K, something like that. So everything that I have has dipped a little bit, and I sold some of that SPY at a loss. So I'm actually not up for the day. I'm just down like 2,500, give or take, yeah. But overall, since I've opened the trades are up like what, like 40 grand, something like that. The overnight dynamic hedge pressure, you like that? Yeah. Oh yeah, so our bots, right? Let's go over the bots really quick. So overnight, our bots try to predict where that hedging is going to be in the morning, but from the overnight session. This is another thing I'll just show you really quick. So 37.45, the low and high estimated range in 37.60 was monthly. So 45 and 60 on futures. And as you see overnight, 37.45 and 60. 37.60 was that monthly hedge pressure overnight, right? And so you see how it was supporting. So if I was shorting overnight, I would have covered my short at that monthly hedge pressure, just like it shows, 37.60. And that's where we supported. And that's really neat how that works as well. Yeah, I know, I love it. Those dynamics are boss. Our bot posts them every night. We supposedly post them every night. So let me check JP really quick because it's selling, and I kind of want to take a look at why we're selling today. Let's pull rock scooter front and center, get some resilience. But yeah, I gotta go. I usually stop streaming here right about this time. I gotta go talk to my team. European markets close in 13 minutes, so keep an eyeball on there. We're getting a little bit of strange volume here. Res is still 0, but we're losing something on NASDAQ. So let me take a look at what we're losing today. Let's look for things that are losing monthly hedge pressure and they're breaking down. So like on the scanner, down. Bull setups that are now below monthly that have broken below monthly because we're on that NASDAQ side. So let's see what looks really bad today. NASDAQ, Nike. So these are the ones that are bullish that are losing their bull side. Nike, Netflix, now, DPZ. So ones that were like opening bullish now that they've killed them. This is not a lot of big hitters on there. Hold on. You're gonna have me close out in a second on the podcast. When do my JPs expire? What do I want to buy? Do I want to add to my NVIDIA? Let's take a look. Hold on. When am I? Let me see my NVIDIA's expire. November 20th. Buy some more of these. Add some more to that. NVIDIA holding monthly is actually a pretty decent sign. Let's say goodbye on the space really quick. I grabbed 5 more. Thanks for having us. Thanks, guys. Coming. Yeah, so I grabbed 5 more of my NVIDIA calls with some of the profit I took on SPY. So now I have my NVIDIA. I like the way NVIDIA is still holding monthly hedge. Like I said, I've been wanting to build a bigger NVIDIA position just going in. November 11th is the expiration. And I think it's like the day or two before NVIDIA had its earnings. So I'm hoping we get a squeeze up going into NVIDIA earnings. Again, I just closed some of my SPY. Hopefully SPY holds 375 for the day. We're pretty good. Like I said, that JP, I want to see that. I want to see a homeboy continue to rally. I love the way JP looks. Again, if we don't, got a couple more days on that. It's down a little bit since I'm 120 is that that strike I want to be in the money. Again, I'm losing a little bit on JP, but it's still pretty decent. So like I said, I'd like to see this continue to hold for the next couple days. I'd like to see at least 1,000. That'll be my first 1,000%er this probably this quarter. So I'm really excited to see if I can get it. I'm ready to hold on to it. So love you guys. Thanks for tuning in. Like the stream. Before you go, watch this video and interact with it. Like it. Tell us anything you want. Resilience is one of the best things that we have made here. That video will cover a little bit about that. Just FYI, been a lifetimer for years now. It's amazing. Matt definitely knows what he's talking about. And the software is incredible. If you're on the fence, highly suggested. Thank you, David. Appreciate it. Can you pull up the tool that shows the type of day was predicted today? Can it? Yeah, absolutely. Sorry. Right here. So just really quick, Rock Scooter is our software we made. It's got charting, it's got scanner, it shows you where market maker positions are, and we're building tons of things for it. SPY being bull, long, and up, all I do is I go to our liquidity map, which is something that's showing you where liquidity will be in a bull long up. I expect the market, if we open, to interact with this blue hedge pressure and bounce. There's a legend here. An opening and interacting with blue hedge pressure and bouncing is what I expect. On a bull long up, anytime we lose hedge pressure by 1 strike, this buffer stop, I will close some of my position or all of it. Here, I closed almost a third of it because it was losing that level. I was giving it one more chance to survive, and I've still got a major SPY position that expires today. I have 375 calls on SPY that I bought last week that are in the money. I've got 21 of them left. It's actually, I sold about half because I had 39 this morning. I used to have like 65 or something like that, and I've sold the majority of it as we've been going in the money. But those 21, if we rally, because there's 0 day right now, I'm going to make a pretty penny on that, so I'm excited. So yeah, I expect the market to hit blue, and of course anything below yellow I'm not going to be long on as it is, and yellow's way down here. So 1 strike below blue, Kenneth, that's when I started selling out some of it, and I gave it a little bit of time to decide if I wanted to dump it all, and we recovered the bull side, so we're good. Get the letters, I look at the liquidity map, I find out if I want to be bullish or bearish. Again, this is telling me where buyers and sellers can be, so if market is lowering price, market makers looking for buyers, this is where you can find them. And when you get to here, as you see, the yellow line and blue line will show you that there are buyers. When you get close to it, there are buyers. There's volume, huge volume, as a matter of fact. You get to there, again, there are buyers. So I like to see that the buyers come in, and once they come in, they are able to keep price on the right side of things. And that's all I do. So I look for volume to spike up, and when volume declines, whatever side we're on, I kind of take that trade. So that's why I closed out a lot of my position this morning. It was scaring me, but I still held on to a little bit more to watch that interaction. And when we got here and broke through it again with volume, and volume declined a second time, we're on the right side of the fence. And now shorts are covering on that same news, and now I'm holding on to my position for the day. That's how I do it. Questions? David, by the way, Matt, it's possible to add to the platform pinch, push, or parallel from the commitment to traders report? Absolutely. We can parse that from the CFTC website because it's public information. We can figure out a way to do that at some point. Yeah. All right, love you guys. We will see y'all later. Head over to the Discord where the conversation continues, and we love you guys, and we will see y'all manana. Actually, today. We'll have a session today. Have a good one.